You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast. And today I would like to start out by just letting you know that this event that we're having September 27th, 28th in Dallas, Texas, it's the Wealth Formula Meetup that we call Wealth 2.0, which I'm going to be talking about, is coming up September 27th, 28th. And I don't even know if there's any spots available anymore, because part of the thing is, I'm recording this in mid-August, and I'm not sure exactly when we play this. But as of right now, there is only about, I think there's definitely less than 7 or 8 spots left. So if you can make it, we would love to have you, because this event is incredibly, incredibly valuable. I mean, beyond the cocktail party, and the fantastic lecturers, we got people flying out like Tom Wheelwright and Doug Ludmell and Dave Steele. But we also have the bus ride where we get to view all of these properties and see what this investment stuff is like up close and personal. But in addition to that, you get to meet each other, which is probably the most, I would say, the most valuable part of this entire experience. I think most people who went to the first event would agree with that. And so definitely come and check it out. I mean, it is a fantastic event, fantastic group of people. It's really you guys who make it up. Check it out and go to wealthformulaevents.com if you're thinking about signing up, but do it quick. It may not even be there anymore. So check it out. Now, for those of you who couldn't make it, there's also Wealth Formula Network, which is an online community that exists in perpetuity. And if you're interested in that, go to wealthformularoadmap.com. It comes with a course and some, Facebook group and a platform and stuff like that. But the other thing is that every other week we're on this Zoom video conference call, and people love it. So check that out, wealthformularoadmap.com. Now, today, I'm going to talk about something that's, I think, is kind of a little different and interesting. Last week I was actually out of town. I was in Santa Cruz. My daughter was at a camp there. It was an overnight camp. She's 10 years old, my oldest one, and it was our first time doing overnight camp. So my wife and I decided we would just hang out with the other two and make sure that she didn't have a meltdown, and we would have to drive up from Santa Barbara and come get her. So we just hung out. She did great, and we didn't have that much to do. But one thing that was interesting was that it coincided with Car Week in Monterrey. So for you car junkies out there, this is sort of like, the auctions and all that stuff that go on, all the fancy vintage cars and things like that. I'd never been there before, and there was an opportunity to go to something called the Concorso Italiano. Now, I'm a guy who still drives my Toyota Prius from 2008 that I purchased during my final surgical residency year. But I do have this crazy fascination, appreciation for vintage Italian cars. So I go to this thing, Concorso Italiano, and man, those old Ferraris are just beautiful. I'm not really into the new stuff. I got to tell you, I'm not really into that. The super race car looking stuff, I'm not really into it. But these old ones are just gorgeous. And particularly, I saw this, one of the cars I really like is a Dino. And there was a 1973 Ferrari Dino. It was silver. It was stunning, and I couldn't get out of my mind. So I got home, and I'm at the YMCA in here in Santa Barbara, and I see this guy driving in his Dino. He's always driving this Dino. He's got this red Dino, and I talked to him once, and he actually bought this thing brand new back in 1975. Now, talk about a great investment that was, but. Anyway, I was telling him about the event, and as it turned out, he was there too. And so he says to me, yeah, but Dinos are slow. He said, if I buy a new car, I'm going to buy a Tesla. Those things are crazy fast. And I'm looking at him going, oh, man, you got to be kidding me. I said, but Teslas have no soul. Okay, so I know a lot of you probably have Teslas and stuff like that, but they are kind of like, robots, right? There's not that really that pretty. I mean, to me, with this guy, so we're talking about two different things. He was talking about performance, right? I mean, Teslas are crazy fast. And I was talking about art. Now, I'm not much of an art guy. I don't really know. I'm not like a sophisticated art person. That's my wife. But I think that my love, my appreciation for old Italian cars in particular, probably is much more in line with an art critic, appreciating a fine piece of art than, like Andy Warhol or something, rather than a guy who just wants a super fast car and is interested in that kind of thing. Because I could care less. I mean, it's not like I could drive that fast in the street anyway. I mean, I'm just, I like the way it looks. Anyway, and as far as the Dino goes, it doesn't matter to me that it's slow. I just want to look at it, appreciate it for what it is. I mean, the thing's a sensory masterpiece, right? You ever heard of Ferrari? I mean, of course, listen to them. Listen to them and you'll know that it's a very distinctive sound. So you've got the way it looks, which is absolutely gorgeous. And you hear it and you're like, oh, that's that Ferrari noise. Now, those new Teslas, well, you can't hear them because they're electric and, drive deaf people crazy because they, or people can't hear crazy because they sneak up on them all the time. And you know what? In my opinion, again, I know some of you got them, but I think they're kind of ugly, especially that SUV. All right, that SUV, which I was thinking would be cool to have a Tesla SUV when I heard one was coming out because they don't like stopping for gas. It looks like an overgrown Prius. Okay, and I have a Toyota Prius. It looks like an overgrown Prius, but it costs a lot more than my Prius did in 2008. And by the way, I got to tell you, the Toyota Prius I had in 2008, this thing's a machine. I mean, gosh, I've only, other than getting a little tune up here and there, changing the brakes and getting a new set of tires, the thing is like the thing is rock solid. It's got over 100,000 miles on it. Never has any problems. It's amazing. And all I do is drive back and forth from the YMCA anyway. So what do I need it for, right? Anyway, so why did I go to this thing anyway? Right? Why do I go to this thing? Just to torture myself with envy? No, in fact, I've been thinking about, beginning, to become sort of maybe a collector, right? And to buy my first vintage car. Now, there's a few I have in mind. I told you I love Ferraris, but I also think that there's some really cool other cars too. For example, late 60s, Lincoln convertible. You got the whole suicide doors thing. It's like this beast that just takes over the road. Super cool. Now, listen, a few years ago, I would have really considered anything that I'm talking about right now completely frivolous. And the reason is because I never saw it as an investment. And while it's true, buying a fancy new car would guarantee, it guarantees that you lose money as soon as you drive it off the lot, at least for the foreseeable future. Buying one that has already, gone down the pendulum of full depreciation and value and then pivoted to become a collector's item is a totally different animal. Now, the new car is what Robert Kiyosaki would call a doodad. Remember, he called that in Rich Dad, Poor Dad and Cash Flow Quadrant. He called them a doodad. It's an expense, right? While in my view, a vintage car would be an asset. Now, he would say it doesn't put money in your pocket, so it's not an asset, but I disagree with that. I think of it as an asset. So, gold doesn't cash flow either, and Robert likes that stuff. So, in my opinion, I'd rather have a Dino or, one of these one of these old 1960s Ferraris and stuff like that than a few ounces of gold any day because because they look really cool and I want one. In the world of the affluent, this stuff is actually not that uncommon. The theme of buying things that you can enjoy today and have is something, with more value in 10 years is actually quite common. And I have to tell you, I didn't really notice it until some of my friends have got, a lot of money, they started to sort of point this lifestyle out to me, and I thought, gosh, that's kind of cool. And if you can afford it, it's actually a very, very smart way to live. And you can start with smaller things. It doesn't mean you jump to $300,000 cars, but if you really like watches, maybe buy something that's a little bit more expensive, and and just hold on to it for a long, long time. I mean, the other thing about older stuff I noticed, and maybe you might disagree with me on this, but the older stuff was really not meant to have sort of an expiration date, right? I mean, if you bought a watch, and I'm not a watch guy at all, right? Like I can't even, it's hard enough for me to keep my wedding ring on. I just don't like to have things in my hands. But, if you're a watch guy, these older watches, these classic, they're made to like last forever. And, they have a little problem, you go work on them, whatever. The new stuff, it's not really made to last. It sort of has this sort of expiration date. It's made to last for a period of time, and then you're done. But, the old stuff is different that way. So anyway, it's a very smart way to live, too, in my opinion, to buy things of value. And, you can think about it like you could talk about cars, you could talk about furniture, watches, wall decorations. If you buy them new, brand new, and you buy them from IKEA, they're going to be worth zero for sure someday. I mean, that's just the reality. What if you could replace all of those things into appreciating assets? And that's a completely different lifestyle. And I think it's pretty neat. Now, it's a very interesting way to live, and one that I'm really starting to warm up to, I have to say. And that's not easy for a guy who still drives his 12-year-old Toyota Prius to the YMCA every morning. Now, listen, I do get that not everyone can afford to spend $300,000 or $500,000 on a vintage car or $3 million on a piece of art, but financial technology is actually making it more and more easy for people to have access to these kinds of assets, for exposure to these assets. And these types of things were just not available or possible for most of us in our reality, say like 5-10 years ago. Now, what about, say let's going back to art. How about owning an Andy Warhol? Did you know that right now, literally right now, there is an opportunity to invest as little as $25 and own part of a famous Andy Warhol piece? I mean, you can even visit the painting at a gallery in New York and enjoy it for yourself. I mean, this whole new world of investing is very, very exciting to me, if you can't tell. And my guest on this week's Wealth Formula podcast is one of the entrepreneurs. This guy's brilliant, who's really making it happen. So if you want your piece of that Warhol or whatever blue chip artist you get excited about, listen to Scott Lynn. He's our guest for Wealth Formula podcast after these messages. Welcome back to the show, everyone. Today, my guest on Wealth Formula podcast is Scott Lynn. Scott has been an active collector of contemporary art for more than 15 years and has built an internationally recognized collection of abstract expressionism that has included works from Clifford Still, Barnett Newman, Mark Rothko, and more. He's also the founder and CEO of Masterworks, the first company to allow investors to buy shares of masterpiece art like Picasso's, Monet's, and Warhol's. Scott, welcome to Wealth Formula Podcast.
Thanks, Buck. Excited to be on.
Great. So, let's start out a little bit with your background, because I was kind of reading up on it. It sounds like you've kind of got a background, a significant tech background, and also internet marketing. So where does the art come from? Is that just did that start as a passion project that sort of as an entrepreneur that you just found an inefficiency for?
Yeah, it's a great question. I mean, I started collecting art when I was very young. So I was probably 19 years old, and on the Masterworks website of a blog article that sort of talks about the learnings with doing that at a young age and being a first-time collector. But it really was just a passion. It was a hobby, as I think it is for most people when they start collecting.
Got it. And how did this sort of how did this evolve? Because obviously when you're a young kid, you're not really, and you don't have any money. I mean, how do you even, were you just buying stuff that you liked, or were you looking at things as an investment even early on?
Yeah, I mean, I was a little bit of an unusual situation that I started my first company when I was 16 or 17. So I think when I was in my 2021, I was running one of the top .com companies at the time. So I was super fortunate to make money at a very, very early age. So I was buying real art. I mean, I was buying Picasso's. The first great painting I bought was a painting by an artist named Marc Chagall. Um,
Oh, wow. Yeah.
yeah, so I guess I was buying real art, but I was also making a lot of mistakes at the same time.
Hmm.
And the art market was very different in the late '90s than it is today. It was definitely a market, but it wasn't. I guess the average person didn't really think of it as an investable asset class. So
Sure.
it was really just a very niche collector market is how
Yeah.
I would describe it.
Yeah. So I want to talk a little bit about fine art as an investment. As my audience is jam packed full of active accredited investors. We tend to focus on assets like real estate, in various classes within real estate. What is the case for someone who's got real estate, maybe some equities, et cetera, to add fine art to your portfolio?
Yeah, I think if you look at certain segments of the art market, and a firm named Art Price has published some of this research, firms like Deloitte have published other components, but if you put it all together, basically what you conclude is that the blue chip segment of the market, and that's really defined as art created by the top 100 most selling artists. So these are household name artists like Picasso, Monet, Warhol, Basquiat, etc. That segment of the market has outperformed the S&P for the past several decades. But maybe as importantly, it's uncorrelated. So Citibank did the first correlation study on the asset class in 2015, and they concluded the correlation between art and the S&P was roughly 0.11. Similarly, if you look at correlation between art and other asset classes, it's close to zero. So what that means very high level is if you were allocating capital to art, and the public equity markets decline, theoretically, art should not move in the same pattern. So we think it's this really interesting hedge almost against other asset classes that just behaves differently due to that lack of correlation.
So let's talk a little bit about, because one of the things you mentioned was because I've seen these outperforming S&P 500. I've seen performance measures, and can you talk a little bit more detail in terms of what determines the art that you're counting that goes into those rankings or those comparisons rather?
Yeah, so the art market is like any other market in that there are all different types of assets in the market that have different risk return profiles. So there's emerging artists, there's mid-career artists, there's what we refer to and Art Price refers to as blue chip art. When we talk about blue chip art, which is really our focus and what we think is the most interesting segment of the market to invest in, that literally is just the top 100 artists by transaction volume. So we just stack rank all of the artists from top to bottom, take the top 100 and analyze that segment of the market. Now, interestingly, and a lot of people don't realize this, there's been hundreds of thousands of artists over the I guess the number of centuries that have existed. There's really 100 artists that comprise 62% of the art market overall on a dollar weighted basis. So when you talk about the top 100, most of which are no longer living, that really is the majority of the market.
Right. So, okay. So say I'm worth $50-100 million. I'm interested in beginning to collect myself. How do you even get started? And when you talk about, for example, you're talking about the blue chip art, what is the price point that you're potentially looking to enter on if you're doing it as an individual, and where do you start?
Yeah, that's a very good question. So we get this question a lot. It really varies by artist, but I would say that to really get blue chip exposure in today's market on a per painting basis, you're probably spending $1 or $2 to $5 million per painting per artist. So when you think about allocating, certainly if you have $100 million, you can allocate effectively by purchasing paintings. But outside of that, it's challenging to allocate to with just buying whole paintings.
Got it. And Is there, one of the things I was curious about, and I just tell you that for me personally, this is completely foreign. My wife is always interested in talking about potentially starting to get collecting art, but I'm about vintage cars are about as close as I get to art personally right now. Because I remember watching this episode of 60 Minutes recently, and there was this like big thing about art fraud. And from art collectors, around the world, and they were spending all this money, and some of them they're finding their forgeries. How big of a problem is that, and how do you mitigate risk?
I'm on the board of an organization called IFAR, which is the International Foundation for Art Research, which is one of the leading art authenticity nonprofits. And it certainly happens in the art market. It's a rare occurrence when you look at the total volume of art overall. And it tends to happen at the lower end of the market. So prints tend to be often faked, or very simple drawings, like Picasso drawings, tend to be often faked. But at the high end of the market, at least for what Masterworks is doing, we're purchasing paintings that have strong provenance. They've been in museums. They have a real history behind them. So the history, to a certain extent, is already written. So the likelihood of fraud is you can never say non-existent, but very, very low for that segment.
Yeah. And so, is that, are you buying these typically at auctions where, you can already describe, you already have all the provenance like you mentioned?
Yeah.
Yeah.
Yeah. The Masterworks strategy so far has been to acquire everything at auction. And that's really to give investors comfort. So, these questions around authenticity or, price, things like that tend to go away if people know that we've acquired paintings in a public auction context.
Right. So let's talk specifically about Masterworks, because I have to say, I think it's just a brilliant concept. Can you tell us? So tell us how it works, and at a high level first, and then if you would just kind of take us step by step through the process of how one would potentially get exposure to art.
Sure. Yeah. So very high level, like we talked about, is if you're an investor and you conclude in today's world that you want to allocate 5% to art, there's not an effective way to do that other than by buying paintings. And for all the reasons you've talked about, I think the vast majority of people don't know anything about the art market and really don't even necessarily want to know about the art market, but recognize that it's this interesting asset class. So our approach to solving that problem has been to go out, purchase an individual artwork, a single artwork, using balance sheet capital, file that painting with the SEC to go public, very similar to how Uber goes public, and then sell shares in that painting so everyone can gain exposure to that individual asset. So that's the platform we have today, and that's how you really allocate to these assets. So most of our investors, when they think about building a portfolio of art, they're thinking about purchasing shares in different paintings over time, so they can construct a securities portfolio rather than a paintings portfolio of whole assets over time.
So let me ask you this, because as I had sort of alluded earlier, we have a fairly sophisticated audience, and probably there are people wondering at this point, wait, so you're going to actually file this with the SEC? You're not going to do some kind of a Reg D exemption, but then these are, asset specific offerings. So isn't that a long process? Like to take a piece of art. So presumably you guys are buying it yourself, because there's no way you'd be able to, raise capital that quickly on a particular piece of art if you were not doing some sort of a Reg D exemption. Can you just explain kind of like the nuances there? Because that's probably something that, people are curious about.
Sure. Yeah. So we've created this community today of really exclusive investors interested in art as an asset class. So the minimum investment per painting is $10,000. There are certain cases, for various reasons, why people may not meet the accredited criteria, and that's why we filed these with the SEC. I would say that the other benefit that these qualified offerings give investors, and one of the things that we struggle with a lot as a business, there's a lot of people that aren't involved in the art industry that look into the industry and say, this is a messy, unregulated industry that sort of operates with lots of people that maybe we can't trust.
Right.
And these qualified offerings do bring a new level of transparency to an asset class that historically has been entirely unregulated. So we frankly use it as a selling point and a trust signal so investors can get comfortable with the asset class.
Got it. So is there like you mentioned something about another group where there's a minimum of 10,000. What is that? Is it a separate group that you have, or a separate type of platform, or whatever that is dealing primarily with accredited investors? Or
No, I mean 100% of our offerings are these qualified SEC offerings.
Right.
Again, that has less to do about investor size and more to do with just bringing transparency to the asset class.
Yeah.
So 100% of the offerings are registered qualified offerings.
So it's interesting. I'm thinking about the process and just the nuances, and I apologize for just pounding on this a little bit. But so you buy these pieces of art. You guys are buying them, right?
Yeah, with our own capital.
With your own capital, and then how long does it actually take, out of curiosity, to get the actual SEC registration from there?
Yeah, it's a great question. So the SEC had never seen a product like this before.
Yeah.
So we filed our first painting to go public with the SEC, a year and a half ago, and I think it took 14 months to get the first one qualified.
Yeah.
So that was certainly a long process. We think on a go-forward basis, that process is around 45 days, and we have 2 other paintings right now that we filed subsequent to that are in the process of being qualified, and that looks like the amount of time it'll take.
Yeah. I mean, and I think there's probably just some additional advantages there too, where like if you're trying to take a $10-20 million painting down, you don't have to deal with like an entity where you have a 99 investor limit or whatever. So that's cool. Let's kind of move on a little bit. I'm just curious. So it's an art piece specific fund. So it's not just like a blind fund where you're just buying art, right? So you'll post, okay, we have a like a Warhol, and I believe you had a Warhol or something like that recently, right?
Yeah.
Go ahead and tell us how that worked.
Yeah, so we have a Warhol that's still available. I think the offering will probably be sold out sometime in the next week or two. So it's almost complete. And then we have two other paintings coming up after it. But investors can see the individual assets. So it's not technically a fund. They're really individual vehicles that hold individual paintings.
Right.
And that's sort of a strategy that we believe in. We think maybe there's an opportunity in the future to do a fund, but we really think with art it's important that you can see the asset, analyze the individual asset, come to your own conclusion around your investment thesis with that painting, and then decide how much capital to allocate.
Yeah.
And part of art in general is it is a visual asset. It's sort of unlike a REIT or something that might be a bit more technical, it is nice to see these paintings and make a decision before you allocate.
Yeah. And I would just add too that I'm a big fan of the asset specific offerings as a general rule, even in real estate, because there's a certain level of efficiency of capital for investors. You don't have dead money sitting around waiting to acquire something, and I think that's another advantage. What other, I don't know how long you've been doing this, but do you have some other examples of artists that have gone through this process?
So the Warhol is the first painting that we've done. So the business has been around slightly more than a year and a half. And as I mentioned, that's really the first painting on the platform.
Got it.
We have, I think, 18,000 investors signed up now. And then the next painting that will be coming up in the near future is a Claude Monet. And that's a $7 million painting.
Wow. So,
we intend to roll out one of these paintings every month or so for people to allocate to.
Cool. And once you buy the art, where do you keep it? Because obviously, it needs to go somewhere really, really safe.
Yeah, it's a great question. So we have, for your listeners that are in New York, we have a gallery in Soho at West Broadway and Broome. So anyone can stop by the gallery at any point in time during the day and see the paintings. At some point, we will likely cycle those paintings either into fine art storage or send them on exhibition when institutions or museums have relevant shows for artists. So like even with the Monet, the Denver Art Museum last year had Monet landscape show for late 19th century Monet landscapes. That was a really relevant show for the painting that we own.
Got it. And so that actually solves another issue, which is like, people who like to buy these types of things, they like to actually go and feel like they own it. So you've kind of actually circumvented that challenge right there. I presume there's a big process of insurance and how does that work? I mean, it's got to be pretty expensive to insure this stuff too, right?
Yeah, insurance is obviously a critical issue that we think a lot about. We take those insured values and we adjust those effectively to NAV for investors, so that they're always fully insured if something happens to a painting. But yeah, insurance is critical. It is interesting when you think about real estate compared to art. With art, you do have insurance, you have storage and transportation, but you don't really have significant carrying costs.
Right.
These assets are pretty easy relatively to maintain.
Sure.
So it's nice from that perspective that you don't really have an expense drag on the returns over time.
So you're probably, you got to have a sense early on just to factor in the cost of insurance, et cetera, how long the hold period is. Talk a little bit about that. How do you decide, do you know from the get-go the idea is we're going to hold this for, 10 years, we're going to hold this for 5 years? How does that work?
Yeah, so art is very similar to real estate, an illiquid asset class. We tell people that they really should expect that there's really no liquidity in the investment for the first few years. It's very hard to purchase a painting and sell a painting immediately after you buy it for a whole host of reasons that are specific to the art industry. So I would think about the hold period in general between 3 and 7 years. Masterworks as a company is in the process of launching trading windows so that investors have the ability to sell their securities rather than only rely on us to sell the painting. So there will be some ability for investors to get liquid before the painting sells, but those trading markets haven't launched, and it's unclear at this point how much liquidity there will be. Mm-hmm. So I still think it's important for investors to think of these as 3 to 7 year illiquid holds.
Are you looking at a curiosity at any of the tokenization models for that?
We hear about blockchain stuff all the time. I think it's certainly interesting. The reality is we live in a very regulated world. All of our offerings are filed with the SEC, qualified by the SEC. We have a broker-dealer on the offerings who is governed by FINRA. The blockchain stuff is interesting, but from a regulatory perspective in the U.S. at least, I think we're a long way from making that a reality.
Well, they're certainly making some strides. You see T0, which is Patrick Byrne's new platform, and there's that's basically securities, tokenized securities, but that's certainly making things easier. So that's really interesting, though. So in terms of the liquidity part of it, you do think that if you did it as of right, the way you were thinking about theoretically, it would just be some platform within your business that you would be able to exchange or buy shares, correct?
Correct. And it's very similar to how Lending Club, for example, works with Folio to power a trading platform within their ecosystem.
Got it. Well, let's talk a little bit about sort of where you think this is going, how you're gonna continue to grow this. Any other features that you think that you're gonna have on Masterworks over time, obviously because it's brand new.
Yeah, high level, one of the questions we get a lot is how do you think about the factors that are driving art prices over time, and how do we think about that 10 years from now, 20 years from now? So we have a research team at Masterworks, and we've done a lot of work studying art market returns in general. And it sounds like your listeners are familiar with real estate, so they're probably familiar with Case-Shiller, mm-hmm. which is an index that tracks returns of real estate. So one of the things that we've done from a research perspective is, frankly, try to replicate what Case-Shiller did with real estate several decades ago. Mm-hmm. So as I mentioned earlier, roughly half of the art market trades through public auction. So our research team has went back in history and identified, at this point, over 35,000 times a painting has been purchased and then later sold publicly to understand the returns on individual objects, and then to construct an art market index. to analyze art market returns. And that's led to a lot of questions and some answers around really what's driving prices in the art market. So we think there's two main things that drive prices in the art market and are correlated with price increases. One, very high level, is that we believe art prices are correlated to ultra wealth creation on a global basis. So the wealthier people get around the world, the more we expect art prices to go up.
Sure.
And we haven't proven that yet, but there does seem to be some correlation between, for example, art prices and luxury goods indexes. The second thing that we believe, which we can show, I think is correlated, is art is one of the very few asset classes where you have a continuing decline in supply. And this is really unique to art overall, but if you think about a particular artist such as Andy Warhol, so Warhol, when he was living, made all these paintings. He subsequently died.
Sure.
Paintings got acquired by collectors, and then collectors tend to donate those paintings to institutions when they pass away, when they get divorced, when they go through life events. So every single artist market over time has this continuing decline in supply, which we believe drives prices up.
Sure.
And even if I look at the artists that I collect personally and artists that I know really well, I take an artist like Jackson Pollock. To my knowledge, there's 21 drip paintings, sort of iconic paintings that exist in private collections today. Out of those 21, there's only a handful that I think any art critic would regard as good drip paintings, meaning well executed good paintings.
Mm-hmm.
The remaining are probably B or C examples. But those B or C examples are still selling for $30 million because there's nothing else left. So if you want to own a drip as a collector, those are the paintings that you can buy. So that dynamic of decreasing supply is really unique. And I tend to think about other asset classes like real estate or like gold, where supply is actually increasing, right? With gold, you're mining more gold every single year. With real estate, you're building more homes every single year. So I think it's unique to the art market that you have declining supply for these individual artists.
Yeah, absolutely. It's a deflationary thing. Whereas even in real estate, we have finite, places where we can build and stuff. But at the end of the day, if we're talking about a specific artist, you're just not gonna see more of it, especially since they're dead. So.
Right.
So that's fantastic. Well, look, listen, where can we learn more, and how can we get involved?
Yeah, so you can go to www.masterworks.io. Anyone can sign up to apply for a membership to begin investing in these paintings. If they mention your name, we're happy to let them skip the wait list. We have a wait list now of several thousand people. And yeah, we'll hop on the phone with them, walk them through the asset class, high level, talk about particular offerings that we have available, and get them involved.
Fantastic. Scott, thanks for being on Wealth Formula Podcast.
Thanks, Buck.
We'll be right back. Welcome back to the show, everyone. I got to tell you, I really love this concept. I mean, to be clear, I'm not saying I'm putting money into this. I'm not saying that at all. So don't ever take me thinking a topic is interesting as a direct, go put money in that yourself recommendation. That's not what I'm doing. I just think it's really interesting, the idea of, taking something that you love, that you have a passion for, that you have an interest in, and being able to invest in it and actually make money. To me, that is super cool. And going back to my vintage car thing, it's funny. I actually was thinking, gosh, this would be so cool if you did this with vintage cars, and maybe you could even, whoever invested a certain amount could go and like drive them once in a while. How cool would that be? And as it turns out, Scott was telling me there's somebody who's doing that, so we'll get him on the show too. By the way, just because you buy a pricey asset, it doesn't mean you're completely illiquid. I mean, that's one of the things that you think about, right? So you're buying a classic car, you're buying a watch or whatever. It doesn't mean that you have to be completely illiquid. With vintage cars, for example, I know this for a fact because I've already looked into this. You can cash out, you can finance these things, you can refi them. And according to Scott, you can do the same with art too. So you can, again, it goes back to that whole concept of buy, borrow, and die paradigm, which is very common in the affluent scheme. So anyway, it certainly, if nothing else, this is fun to talk about, and hopefully you enjoyed it as well. Now, we're going to have lots of interesting conversations coming up shortly, September 27th to 28th in Dallas at our Wealth Formula Meetup. So if you haven't done so, make sure you check that out at wealthformulaevents.com. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.